OpenAI is crashing and ChatGPT is losing. So, what happens when you burn through $140 billion and still can't turn a profit? What happens when the company that started the AI revolution has to declare code red because Google is eating their lunch? And what does it mean when your latest model, the one you rushed out the door to compete, gets called boring, robotic, and a step backwards by your own loyal users? Now, OpenAI is in serious trouble, folks. The company everyone thought would dominate AI forever is watching its lead evaporate in real time. After a long time in the industry, I've seen this exact pattern play out before. And what's happening right now should kind of concern everybody a little bit because could drag down the whole AI industry. Let's take a look at this today and dive into ChatGPT's latest failure. Welcome to Startup Pack. I'm Spencer, and here at Startup Pack, we love to build custom software solutions for companies. With a decade of executive leadership as a fractional CTO and 25 years in software development, I've mastered transforming tech teams and products. So Sam Altman declared a code red in December at OpenAI, and this was the same emergency status that Google declared 3 years ago when ChatGPT first launched. But the tables have completely turned now, and Gemini 3 is topping benchmarks. DeepSeek is producing comparable models for a fraction of the cost, and ChatGPT 5.2, early users are flooding Reddit, calling it worse than the version before. Let's break down the 12 reasons why OpenAI might be heading towards absolute zero. Now, let's dive into some of these early projections here that we're seeing and some of these responses that we're seeing. So, GPT 5.2, negative, cold, unpleasant, and uncensored. He said he's been testing 5.2, and it suddenly seems very negative and cold in its response. Plus, it's refusing super basic things that are not even sensitive in any way, making up random safety or guideline concerns, like absolutely nothing even remotely sensitive. I've asked it to make a fictional story arc about the recent past to compare it to what Gemini did, and it repeatedly goes exact word example. I need to stop you right here, calmly but firmly. Is OpenAI going to do this ping pong of personality with every single release? And everyone says it's glazing, it's too cold, and I miss the days when AI just used a tool instead of a buddy. And then, according to your history, every single model sucks. 5.2, 5.0, Gemini 3 Pro. I see a pattern here, so this guy's just flamming that guy. But it says it's good that models are trained on Reddit data so they can learn from honest reviews. So, I mean, but it's not even just them. So GPT 5.2 branded a step backwards by disappointing early users. So OpenAI says ChatGPT 5.2 is the smartest generally available model in the world. Reddit users claim the new upgrade is boring and too cooperative. And 5.2 is 5% worse than the predecessors. So GPT 5.2 is now available as OpenAI tries to flex its muscles to combat Google's impressive Gemini 3. So this is what came out after the code red. But most users aren't very happy. The new AI model of the world's most popular chatbot hasn't even been out for 24 hours, and users are flooding social media with highlights highlighting their discontent with the update. A Reddit thread titled, "So How We Feel About 5.2 on the GPT subreddit has many of OpenAI's most loyal users discussing the shortcomings of the new model. And Sam, of course, is sitting here touting it's the smartest generally available model. So could that be a vocal minority? It's possible, but it'll take a few weeks to truly understand how much of an improvement GPT-5 really is. But after 5.1, we're not really so sure. One user wrote, boring, no spark, ambivalent about engagement, feels like a corporate bot, so disappointing. It's everything I hate about 5 and 5.1, but worse. So I would definitely agree with that. And one of the things that I'm seeing here is we have a $200 billion mistake. So why AI training is dead. Now, DeepMind's research predicted that System 2 thinking would beat model in size. But in 2026, the prediction is now our economic reality. So it says a small model thinking for 10 seconds beats a giant model answering instantly every time. The bigger is better era for enterprises. The bigger is better era for enterprise AI. Well, it's over. For 5 years, the industry operated on a single law: want a smarter model, build a bigger cluster. We measured intelligence and parameters and training tokens, but the graph has crossed a line. And that's what they're talking about here, right? We're talking about inference. And this is what I've been talking about on the channel for a long time, where we're seeing, 100x training costs to be able to get 1% of training better. And honestly, I think it's just getting worse. I think every large model that they're releasing from here continues to get worse. The shift from training to inference isn't theoretical. It's visible in the account payables of every major tech company. If you're a CFO, look at your API bills, right? We recently just started some projects and we had to shut down anything we did in the cloud because it just got too expensive too quick. And that's part of the reason why we build out our own hardware. As you can see over my shoulder here, the hardware here that is that we build out for ourselves. So this is client hardware that we're building to build AI workstations for our clients. Now, let's jump into a couple of other things here. OpenAI is sinking and dragging down the AI industry with it. How Sam Altman is pulling Oracle, AMD, NVIDIA, and others into the biggest gamble in tech history. So the article goes on to say, if you still think AI revolution is a story about progress and saving humanity, think again. OpenAI is burning $11 to $12 billion per quarter. That I don't think we've ever seen a company with that burn rate in history. And its pervasive appetite keeps growing until the end of the year. This could be been considering a problem for Sam Altman, OpenAI shareholders, but now everything has changed. OpenAI no longer wants to go down alone. It's dragging down the leaders of AI and financial industries with it. Now he's going on to say, and I'm trying to guess whether you realize it, and in the end, it won't be Sam Altman who pays for all of this, but us, right? So they're going on to say that it's chronically an unprofitable company, and they go through and show that. They show how it's a broken business model, right? OpenAI's gross margin is only 41%. Gross margin is the difference between revenue and direct costs of producing a product. For OpenAI, this is what they pay Microsoft for each user query to ChatGPT. And they break it all down here. But OpenAI is left with only 41 cents. So meanwhile, in the SaaS world, normal gross margins is much higher, 70 to 85%. NVIDIA 73 to 76%, to put that into context. So where does the money come? Now take a deep breath. If you're standing, you better sit down. The Yahoo Finance feature reports that OpenAI is accumulating $1.4 trillion in planned investments for the next year. You got that right. A chronically unprofitable company with progressive debt has accumulated $1.4 trillion in planned investment for the next 8 years. It's crazy. Now let's talk about this. How to cash in when the AI bubble pops. And this is part of what I wanted to really make sure I spend time on today, right? It says the money people are never going to tell you. The money people are never going to tell you when they think something scary is happening that might lead to a crash. Why? And what does that in itself tell us? Well, let me bring in a decade of experience in interpreting the money people. Time to panic or time to maximize? And I think it's time to maximize. I'm not really a panicker. I like to try to find opportunity in these. So let's talk about excess and overheat. They're telling you without telling you. The GeekWire missive from the great startup city of Seattle is just the latest in the long list of lines I've heard last few to call it the so-called AI bubble. I agree with some of it, not all of it, but for sure echoes of the sentiment of the investor crowd I know and other articles I've read and written. He says they see a clear sign of excess in AI, especially in early stage private companies where valuations often outpace real traction, but they largely reject the idea of a catastrophic bubble, and most argue that the technology itself is already delivering real value. So that's the whole point here, is what I've been talking about for a long time, is AI is going to be here to provide real value because we're able to take it and like myself and the stuff we're building for clients, we're able to build out real AI solutions using engineering practices. But do I think that OpenAI and Google are going to give us AGI that's going to solve the world? Absolutely not. OpenAI is projected to lose $140 billion between 2024 and 2029, according to the Deutsche Bank analyst Jim Reed. No startup in history have ever operated without expected losses anywhere close to this scale. We're in a completely uncharted territory. The company is burning through $9 billion this year while generating only $13 billion in revenue, spending $1.69 for every dollar they make. Now, even their own CFO admits that they could break even if they wanted to, which means that they're deliberately choosing to hemorrhage cash. So financial expert Sebastian Malaby predicts that OpenAI could run out of money within 18 months if they don't secure massive new funding. Now, OpenAI rushed out ChatGPT 5.2 because of their code red, right? And this was response to that code red that they called in December. And users immediately called it a step backwards. Reddit threads are filled with comments like too corporate, too safe, and it's everything I hate about 5 and 5.1, but worse. Users described the new model as boring, robotic. Some employees reportedly asked for the release to be delayed so the company could have more time to fix issues, but of course they were overruled. So this mirrors what happened with ChatGPT 5's launch in August, which received mixed reviews and users complained it felt clinical. So when your most loyal power users are calling your latest release a downgrade, you've got a serious production problem. Now, as always, make sure you drop a comment down below, because the best compliment you can give me is to leave a comment. I read all of them. Definitely love it. Best compliment you can give me. Now, Gemini now has 650 million active monthly users, up from 450 million just a few months ago, and it's growing fast. Gemini 3 is topping industry benchmarks across reasoning, science, and doctorate level tests that ChatGPT used to dominate. ChatGPT's website visits dropped from 6 billion in November to the second month-over-month decline this year. Salesforce CEO Mark Benioff publicly announced that he was ditching ChatGPT for Google's latest model, so that's a major signal. Even Jeffrey Hinton, the godfather of AI, told Business Insider that Google is beginning to overtake OpenAI right now. Google has $30 billion in profit every quarter to fund AI development. OpenAI has nothing but mounting losses and investors' hopes. So DeepSeek R1 model threw Silicon Valley into chaos by achieving comparable performance to OpenAI's model at a tiny fraction of the cost. Sam Altman himself admitted that DeepSeek's R1 runs 20 to 50 times cheaper than OpenAI's similar reasoning model. DeepSeek built R1 for approximately $5.6 million. OpenAI reportedly spent over $100 million on GPT-4 alone. When DeepSeek released their results in January, NVIDIA stock plunged 17% in a single day. DeepSeek's cost efficiency proves you don't need to burn billions of dollars to build world-class AI. And that's what we do here at Startup Hack, is we build world-class AI using open source models on regular server hardware, not regular, but we on server hardware that's, in this world, not out in the universe, like people like X and XAI and OpenAI is spending, right? So we build real servers, real software, and we couple it with real software principles, and we are building out real AI tools for our clients. So the rise of efficient open source competitors means OpenAI's expensive proprietary approach is already becoming obsolete. Now, there's Altman's internal memo declared a code red to marshal all the company's resources towards fixing ChatGPT and nothing else. The company is delaying advertising plans, shopping features, and health agents, and a personalized assistant called Pulse. Reports indicate that OpenAI's large pre-training runs through 2025 have failed to produce models better than the previous versions. Altman privately told employees that Gemini 3 could, quote, create economic headwinds for OpenAI corporate speak, and that's corporate speak for we're in trouble, folks. So the code red forced teams to potentially cancel holiday plans, the same thing Google employees went through 3 years ago when ChatGPT launched. So when your CEO sends emergency memos about losing ground to competitors, the days of comfortable marketing dominance are clearly over. So OpenAI has made infrastructure commitments totaling $1.4 trillion over the next several years, trillion with a T. HSB projects that their data center rental bill alone will hit $620 billion between now and 2030. The company signed deals for 36 gigawatts of compute capacity, enough electricity to power a state larger than Florida. Financial Times Alphaville blog described OpenAI as a money pit with a website on top of it, and they're not wrong. These massive commitments were made when OpenAI still had first mover advantage. Now that advantage is evaporated and completely gone. Betting over $1 trillion on future dominance while your competitors are catching up is an incredibly risky position. Now, equity analyst Mark Hendricks compared OpenAI to MySpace, the early social media winner that couldn't monetize and got crushed by Facebook. The vast majority of ChatGPT's 800 million users are on the free tier and refuse to pay for subscriptions. That's a huge business model problem. OpenAI has profitable core business to fund AI development like Google does. They entirely depend on the investor money. One venture capital boss told economists this is the WeWork story on steroids, referring to the co-working company that burned billions and went bankrupt. Being first doesn't mean you win. Just ask those old .com companies that got crushed by competitors who came later and executed better. History shows that early market leaders often lose to well-funded competitors with stronger business fundamentals. There's no defensive mode around LLMs anymore. They're essentially commodities that can be replicated by competitors with resources. And by resources, you don't even have to have that many resources anymore, as you can see on the stuff over my shoulder here. Microsoft and Google can afford to give away their models for free indefinitely, while OpenAI needs to charge just to survive. Now, DeepSeek proved that comparable models can be built for pennies on the dollar compared to OpenAI's approach. Remember how Netscape was the dominant browser until Microsoft cut off its air supply by giving away Internet Explorer for free. OpenAI needs to prove ChatGPT is more than just the first publicly available LLM, and so far they haven't done that. And then nipping at their heels is Gemini, who is integrating into every one of Google services. And again, this is Google. one of the largest tech companies in the world. So the commodity nature of AI models means price competition will intensify and margins will compress for everybody. And that's part of the reason why here at Startup Hack, we've worked to niche down, to go into domain verticals where we can build specific systems that have AI fully integrated into them. So not just SaaS, but SaaS with AI integrated into it. Now, dozens of top OpenAI researchers have left for former CTO Mira Murati's thinking machines and Meta Superintelligence Labs. However, as we're just hearing reports come back from Mira Murati's thinking machines, is that some of those are now going back. So the incestuous nature is crazy. The departures include key people responsible for OpenAI's most important technical breakthroughs. Now, thinking machines raised $2 billion at a $12 billion valuation, and they don't even have a product. And so, that's a whole different kind of crazy that I was talking about yesterday. Now, Microsoft invested just over $13 billion in OpenAI and reportedly lost $3.1 billion on investment in just one quarter. Redmond previously hid these losses as part of other expenses, but now has to disclose them more clearly. Microsoft is reportedly diversifying towards more efficient small language models rather than relying solely on just OpenAI. So they're 5.3 and they're 5.4, and they're starting to do a lot more with those that are pretty impressive for a small model. Now, if your biggest investors and partners start hedging their bets on you, that's not a vote of confidence. OpenAI's dependency on Microsoft creates strategic vulnerability. They need Microsoft more than Microsoft needs them. So a financial expert suggested that OpenAI could eventually be absorbed by Microsoft, Amazon, or another cash-rich behemoth. So the industry is shifting focus from training compute to inference compute, and DeepSeek is winning this battle. DeepSeek's inference costs are 6 to 7 times cheaper than comparable OpenAI models for long context processing. And part of this is because they've learned how to be efficient on older hardware that is much less expensive. Now, OpenAI's reasoning models, like their thinking modes, are expensive to run because they consume more compute per query. The more OpenAI doubles down on expensive reasoning models to win benchmarks, the more they increase their operational costs. Companies building AI products are increasingly choosing cheaper alternatives that deliver comparable results. The economics of AI services favor efficiency over brute force, and that's not where OpenAI has been investing. So OpenAI insiders are projecting a 4-year valley of death with cumulative cash burn of $115 billion before profitability in 2029. Given CEO Sam Altman's history of optimistic projections, the actual timeline is actually much worse than that. OpenAI's ambitious revenue projections require growing from $13 billion in 2025 to $200 billion by 2030, an almost impossible trajectory. The company's models still can't be fully trusted. They hallucinate, they give bad financial advice, and mislabel images. Altman has started suggesting a government bailout might be necessary. That's not the language of a confident market leader. So in my time of building software, I've seen many companies project their way out of trouble on paper while failing miserably in reality. Now, I'm curious to hear what you guys think. Do you agree? Do you disagree? You know I love to have a great conversation, so make sure you leave a comment down below and make sure you like and subscribe. Here at Startup Hack, we love to build custom software solutions for companies, so check out some information about our services and check out startuphack.com.
Hi, I'm Spencer, a fractional CTO. With over a decade of executive leadership and 25 years in software development, I've transformed technology teams and products for businesses just like yours. As your fractional CTO, you get the strategic guidance of a seasoned technology executive without the full-time commitment. Perfect for companies ready to leverage cutting-edge technology without expanding headcount. My team at Startup Hack has already built advanced AI agents for small and medium businesses, automating complex workflows and delivering advanced ROI to human workflows. We specialize in creating custom software that connects your systems into a single coherent technology ecosystem. Our development approach focuses on tangible business outcomes. For one client, we developed AI-powered workflows that cut days off of human processes. For another company, by connecting multiple systems, we reduced processing time to increase their ROI by over 75%. We don't just write code, we architect solutions that scale. Whether you need cloud system architecture, data integration between legacy systems, or custom AI agents that automate your unique business processes, my team delivers results that exceed your expectations. Having led technology for a lot of companies and launched 7 successful brands of my own, I bring battle-tested expertise to your business challenges. Our specialty is turning technological complexity into business advantage. So if you're ready to harness the power of AI and custom software to drive your business forward, let's connect. Together, we'll build technology that doesn't just solve today's problems, it positions you for tomorrow's opportunities. Technology leadership, decades of experience, AI powered. Reach out today and we can help you. Check out